Now, at the same time, although you are very much into the stocks, we have also seen that you also suggest mutual funds. So why that change for some customers maybe?
Yeah. No, I recommend investing in mutual funds for everybody. The reason is this, right? Mutual funds are very good diversified products, right? When I say equity, you can lose money, you can make money, right? But mutual funds typically invest in 50, 80, 90, 100 stocks, right? I'm also suggesting, say, index funds or diversified large cap funds, right? So what ends up happening is you will beat inflation through mutual funds, excellent product, the fees will be less, right? Typically, if you go direct, then or index funds, the fees are 0.5% or even less, right? Plus, you make sure that you get market returns. If the market has gone up by 12%, then more or less your mutual funds will also do 12%, right? So mutual funds have to form the basis of your personal fund, the foundation of your personal finance
portfolio
journey or portfolio, whatever you call it, right? Because they are low risk relatively. They have market risk, but relatively they have low risk, well diversified, low fees, right? You'll get market returns, and volatility is relatively less. So unless you have incidents like 2000 or 2009 or 2020 or before that 1974 or whichever, these incidents are also 15-20 years apart, right?
Absolutely.
Your portfolio will not go down by more than 20%
Yes.
or 15%, right? So which is fine. You can stomach that volatility, do SIPs, build up over a period of time.
Absolutely.
Stocks can be ulta.
Tumble
For
down.
no reason, good, great stocks will fall down by 50%. For 5 years, stock price will not move anywhere, right? Market has gone up by 50%, your stock is still there.
Absolutely.
I'll give you examples like, look at example like Tata Elxsi, right? Very good company. It is actually 100 bagger, more than 100 bagger in the last 15 years, right? Or last 12 years. If you look at that stock price in 2012, 2025, the stock has gone up more than 100%. But for the last 3 years, actually, I think the stock has fallen by 40%.
Oh, yeah.
So if you're invested in 2022, I think you have lost 30-40% of your money. I may be wrong on the exact numbers, but you'll get the trend.
Absolutely.
But if I invested in 2012,
you would have
made more than 100x.
Yeah.
Right? So that is the kind of volatility which is inherent in direct stocks.
Direct equity. Yeah, absolutely.
However, mutual funds remove that problem. They diversify across many. So it also gives you the confidence to invest in equity. See, for most people, equities looks risky, right? And there is a learning curve. Now we have like more than 16-17 crore demat accounts, right? Just 4 or 5 years back, most of the people had never experienced equity, right?
Oh, yeah.
So I think the number was less than 2.5 crores in March 2020.
Yeah.
Today I think the number is around 18 crores, right?
Absolutely.
So 75 to 80% of the investors have actually come after 2020 who have not experienced volatility so much.
Yeah, absolutely.
So when you look at your investing journey, if you start with mutual funds, you build the savings habit, you build the habit of consistency and discipline, you understand how equity works, and then you can go to stocks because by that time you have figured out whom to take advice from, what really works, what kind of stocks should I invest, should I do it myself, should I outsource it to somebody, whose help should I take, or whatever it is, right? Or at least your learning has happened over a period of